Well, hello, everyone, and welcome. This is Cynthia Tomane with Interactive Brokers, and I'm very pleased to have with us this afternoon Ben Phillips, the Chief Investment Officer for EventShares, our sponsor for today's event. Ben serves as that Chief Investment Officer, overseeing research and portfolio management for the advisor, and chairs the investment committee for each of the funds. Mr. Phillips previously worked at Goldman Sachs Asset Management, where he had portfolio management responsibilities across several multi-sector total return funds. Mr. Phillips also works in EventShares New York office. So please join me in welcoming Ben Phillips. Ben, I'm going to go ahead and pass the presenter controls over to you. So if you would go ahead and share your desktop, we'll get underway here today. Thanks for joining us, Ben.
Great. Thanks for having me, Cynthia. Do you see everything all right here?
I see you in full screen.
Great. All right. Well, thank you, everyone, for joining and dialing in today. I think it makes sense if we're going to approach Washington's impact on Wall Street, really to talk about where EventShares came from, the story of our founding. So on the run-up to the last presidential election, the EventShares founders realized that there would be a clear-cut set of companies that would benefit under Trump's policies and a very different set of companies that would benefit under Hillary Clinton's policies. And we took a step back and said, this isn't just this election cycle, it's every election cycle. So we researched this policy impact on companies, and it checked out. We quit our jobs at Goldman and launched EventShares as the first policy investing company globally. So really an overview of what we're all about. Everyone's heard the expression, all roads lead to Rome, right? It's an old saying, but really it's today, all roads lead to Washington, D.C. And you may have wondered why in 2008-09 that DC was the only market where home prices did not fall. That's not a coincidence. And it's the epicenter of all global policymaking, and there's tons of money flowing through. It has global implications for economies and business models everywhere. So EventShares is really a policy investing powerhouse. We have a research arm where we're doing a lot of policy investing research, and then we manage investment funds. Our policy research drives the entire investment process. So in other words, we put our money where our mouth is. You could go to our website to find it, eventshares.com, and learn more about the funds and strategies we manage at eventsharesfunds.com. So EventShares is the research site, and an advisor site. EventShares Funds is where you can find more on the funds. And you feel free to follow us on Twitter as well at event_shares. So just a quick executive summary, I think that will help people understand how we approach policy investing, and we'll drill down into each one of these topics in later slides. But really, starting with policy investing, our view is that Washington, D.C. and the policies coming out of D.C. can be a powerful leading indicator for investment returns. And so policy investing really strives to identify these changes in the policy and invest in the most impacted companies. If you think of some of the key features of policy investing, really the biggest one that I just mentioned is this leading indicator. So the US legislative process is so highly publicized, but you have to know where to look, and that's where our expertise comes in. We also look at policy as really a long-term investable horizon. So if you think about it, it's not just a 1 year or even 2 year trade. These are things that can impact companies' business models over 5, 10, even 20-year periods. You can look back to Obamacare, where that's still having implications on healthcare companies. Dodd-Frank is still being discussed this week, right? So these are things that have been impacting markets for really over 8 to 10 years now. We also like the fact that it's historically uncorrelated. So policy making occurs regardless of where we are in the economic cycle and presents investment opportunities that are generally uncorrelated to the market, in our opinion. So if you can identify these, you can actually perform very well throughout the entire cycle, whether the market's going up or down. So how it works very simplistically, and we'll get more into this later, but it starts with the policy. Everything starts with the policy top down, where we track the legislative updates, we track any executive actions or trade activities or anything coming from the policy side. We analyze that policy as the second step, and build a policy profile. This helps guide us to the third step, where we look at which companies and sectors are going to be most impacted. And you can think it narrows us down into pretty narrow subsectors where there's only a handful of companies. And then fourth, it's the portfolio allocation. Which stocks should we own? And this is where it's a little more bottoms up or fundamental analysis to determine which stocks are most exposed to the policy, yet still have a fundamentally sound investment thesis. And then onto the policy outlook, and we'll drill down into all four of these and more, but some things we're watching right now. NAFTA, we think there's going to be a deal relatively soon, although I'd say we're a little more concerned that it might take longer given the rumors we've been hearing this week from our contacts in DC. On banks, the head of the CFPB continues this deregulation push, and this is, outside of Congress. This is going on a little below the radar that I think people aren't paying as much attention to. So we're watching that very closely. Ethanol, big topic here is the corn states are pushing for year-round ethanol production. Right now, there's a shutdown during summer to prevent smog. So that's another thing that could drive ethanol producers and corn producers. And then the drug and opioid crisis, this continues to be discussed, but we think there is some policy and legislation that is potentially coming there that could impact companies. So just as far as what we're going to cover today, we're going to talk a little more about policy investing. We're going to cover those key features. We're going to talk about how it works, try to get a little bit more into the details, and then look at some past examples where policy has really driven companies' returns. And then lastly, we'll look at our 2018 policy outlook. So what is policy investing? Policy can be a powerful leading indicator of changes, as I mentioned, and you can look to it to say what's going to happen to these companies' business models. Sometimes we can spot the policy before even companies' management teams can see that it's going to impact their company. And so we strive to position in those individual companies' stocks before the rest of the market is even aware. And that's how we drive alpha in our strategies. We hold long-term positions, and we also hold long positions and short positions. So we tend to look for longer-term policy catalysts, though we will play some shorter-term catalysts. But again, we can go long and short, so we can benefit from stock prices going up and down based on policy. So it's not just, policies aren't always positive to companies, and we can position on both sides of that. Looking at the bottom chart here, just as far as the policy investing universe, we typically do not invest in micro caps. Those are more idiosyncratic or stock-specific stories that tend to drive those companies' returns. But we do like the small cap space and mid cap space. I would say that's our sweet spot. And then the smaller large caps, generally the 10 to 20 billion. So not the mega caps out there. And that's why you see that is half red and half green. On the policy factors we look to, we think there's four key policy factors: trade, regulatory, fiscal, and monetary. We look at those first three very closely. We think those are the ones that are often ignored or underanalyzed and definitely underexploited in the market in our view. The monetary side is probably the most overanalyzed, and this is where you have people talking about Fed policy and other monetary policy drivers. Flipping to slide 6, we look at the policy landscape, and this is just an infographic that came from one of our pieces of material. But again, policy as a leading indicator, that is the key guide to our whole investment process. In our view, policy impacts everybody's lives, whether it's where you're shopping or where you're working. And you can think about even just the levels of defense spending. Those obviously drive defense stocks. Capital requirements of banks drive the financials. Oil and gas exploration regulations, those drive the oil and gas stocks. And then tariff and tax levels really have implications on almost every company in the United States and globally for that matter. Looking at some of the examples of things we invest in, I just mentioned a few, but you can see tariffs, clean water, so EPA regulation, healthcare reform and its impacts on healthcare stocks, whether it's pharmaceuticals or the hospital operators, defense spending, like I mentioned, ag exports, infrastructure, mining and exploration, everything you see here, and really you can think everything in the United States, every business is impacted in some way, shape, or form by policy. Some of the key features, one, just drilling down into this leading indicator. Because the US legislative process is so highly publicized, it can allow investors to position ahead of these material changes. The problem is nobody's really doing this, and we're one of the first firms to explicitly be researching this phenomenon and then also implementing it in portfolios. We try to be fully transparent about everything we're doing. So if we make any changes or our view changes on research, we make sure to put out notes and broadcast it widely on social media. But back to the leading indicator. So some things that we're watching the meetings and hearings. These are typically open to the public. If you're a policy nerd like we are, you can tune into C-SPAN and watch these live. Not as action-packed as that sounds, but definitely a great resource. There's also everything is filed in the Federal Register, another great resource. And then the Library of Congress, congress.gov, you get real-time updates on which bills are progressing and then the upcoming week's agendas. So a great place to look for what is coming down the pike in the policymaking landscape. And then the media, this really adds actually another level of transparency. You have to know where to look and you have to know which journalists are really plugged into the right people, but we have a great resource there through our media contacts. The long-term horizon. So really drilling into this, and I mentioned it on the first few slides, but these policies can have a multi-year impact as government agencies not just pass the law, but the implementation of the rules and regulation, which really can take years after the law has passed. So just stepping back so people understand that, as a law is crafted, it's crafted in Congress, and then it goes to the executive office and the president signs it and it becomes law. But then there's this whole multi-year period following that where people have to say, in government agencies have to determine how the different rules and regulations will work and really implement the law. So just because a law is passed does not mean we actually know the rules and how companies are going to be impacted. There's that long tail event down the road. So on the long horizon, it's really these changes to policy and regulation force companies to make changes, to pivot here. And company leadership teams have to adapt to survive or they risk falling behind their competition. The other thing, once these changes occur, investors look at the businesses and say, we need to rethink our business valuations. Something has materially changed in our analysis of this company. We have to see what the impact is on future earnings. As everyone on this call probably knows, that is generally how a lot of people look at stock valuations, is they try to discount the future cash flows and the future earning streams of a company to come up with a fair value for the stock price today. So in our view, this long horizon really presents an opportunity to buy mispriced assets, and partly because one, investors don't understand that these regulations could change the company's profit margins and profitability. Two, investors may not factor in a new customer base or opportunity for the company, and Obamacare was a great example for this in a lot of healthcare IT companies. And then three, the impact may actually create a relative opportunity to gain share at the expense of competitors, and we'll look at a solar panel tariff example here in coming slides. The third feature that we like to call out as far as policy investing is it's historically uncorrelated. So I mentioned that this policy making occurs really independent of the economic cycles. You can even, we mentioned down here on the second bullet that during the crisis, the last economic downturn, the Obama administration and Congress still passed the Affordable Care Act and Dodd-Frank, which were two major pieces of legislation that had huge implications on the global economy, really, particularly US companies. So this low correlation with the broader market really, we think, presents another opportunity to position and drive alpha throughout the cycle. So regardless of Congress debating and all the noise you may see, legislation is still moving down the channel and moving through and coming to fruition and passing as law. And then there's that multi-year implementation process that we mentioned earlier. And I think the point here is the government can't pause policymaking because of a recession. Policy still has to move forward, and that is the goal and job of Congress. And then back to the last bullet here, it's really because of this low correlation that we think you can offer returns that are uncorrelated to the broader market and economic cycle. So how does it work? Really drilling down on the first step here is into the policy. And so if Congress passes that bill, it becomes a law. Then it's the government agencies have to interpret those laws and write the rules for them. And so this is where we're tracking it very closely. And we're looking at the various agencies on how they're writing those rules and very much looking at the draft legislation too before it's passed. But the key point is once it's passed, there's still a lot more to learn from it and ways to position in companies. The second step is analyzing in the bottom left. And this is where we develop our policy profile for the key bills and the regulations to really help understand which sectors and subsectors are going to be the most impacted and whether or not it's positive or negative. Are they going to help or hurt these companies? So again, those 4 policy factors really focusing on just trade, regulatory, and fiscal. Obviously, as investors, we have to look at the monetary and pay attention to monetary policy, but really the best opportunities we think for alpha is in the trade and regulatory and fiscal buckets. Then we screen down the policy to the third step here, and it's really the markets application. So how do we filter down to the companies both fundamentally and qualitatively that are going to be most impacted? And that's where we have our own proprietary investment process that is both fundamental and quantitative to determine which companies' margins are going to be impacted most, how it's going to impact their balance sheet, what are the industry implications, does this change, does it redraw the product lines, are there different ways of competing, what are the new regulations and how are those going to impact a company's profitability. We drive down further, and this is where we go into the individual stock selection, where we allocate and manage based on our thematic policy view. So it's really this policy profile that we've developed, and then the policy trend we've identified, and then which stocks to position in to express that theme. The first policy example that I want to call out is the solar panels tariffs. And one of the biggest stocks affected was First Solar, FSLR, is the ticker there you see in the top right. There were Section 201 tariffs ordered by the Trump administration, really after the ITC makes tariff recommendations. So let me back up and just tell a little story of the Trump administration. When they came into office, they really went across the United States and collected some of the best lawyers on trade policy and brought them on to various staff. And so Trump helped build this team, and it was very clear to us from the beginning that he was going to be very focused on trade just because he built this all-star team of trade lawyers. And he started looking at various different sections in ITC codes and things like that to determine where the best place to implement these tariffs were. So this Section 201 is where they went after the solar tariffs. Just a background on that, it was about 2 Aprils ago, so 13 months ago, that we saw the first signs that there was likely going to be solar tariffs. So you can position well and ahead, and I would encourage people to look at the FSLR chart and see how this is performed. But the solar tariffs were not actually announced officially until last October. The thing about First Solar is they are using a different technology. The second bullet point here, they're using thin film solar cells instead of the silicon panels like all of their competitors use. These are produced in Malaysia, the solar cells are produced in Malaysia, and so the imports to the US were not impacted or hit by this tariff. So First Solar performed very well, and its competitors performed poorly following the announcement of these solar tariffs. And we still think First Solar is positioned to grab market share while their competitors have to reconfigure their supply chains and really entire business models. So great example here of companies that were one company that was really benefited by a policy, and a handful of companies that were really hurt by a policy's implementation. Looking at the second policy example, we look at the renewable energy tax credits. And this was a unique feature pre-tax reform where companies could use a renewable energy company's tax credits to offset their foreign earnings. Following tax reform, this whole structure was changed, and companies were no longer allowed to use that full benefit and it really reduced their ability to offset their foreign earnings. So what happened was these renewable energy tax credits became a lot less valuable. So the wind and solar producers like HASI and PEGI, that's Hannon Armstrong and Pattern Energy Group, those are the tickers HASI and PEGI up top, they were both negatively impacted by tax reform because it removed the ability for companies to offset foreign earnings using their tax credits. These companies were buying the tax credits effectively from HASI and PEGI, and now all of a sudden they were worth a lot less. So a material negative hit to both Hannon Armstrong and Pattern Energy's earnings potential in the long term. So turning to the 2018 policy outlook, some key items we're watching. NAFTA is one that's really in focus, and the deadline for at least a deal or an agreement in principle, as they're calling it, is tomorrow. So we're watching tomorrow closely. They may try to extend it to have an agreement in principle in coming weeks. We think the takeaway here is that NAFTA stays relatively in place. And even if it's kicked to 2019, if Congress doesn't get their act together in the next 30 days, it may move out to 2019, and we're going to hear a lot less about it. But we think the key takeaway is not a huge change. So the companies that we like and that we're watching are Borg Warner and Delphi, that's ticker BWA and DLPH, and Kansas City Southern, KSU. We think those companies are actually going to benefit for NAFTA staying relatively unchanged. Yes, there'll be some small wins, we think, for the United States, but overall, not a major change. So we think positioning these auto suppliers and a railroad operator, Kansas City Southern, that have we think, seen some price pressure due to NAFTA headwinds, we think those are actually a decent place to be long. On the automakers, we're negative, and that's Ford, GM, Toyota, and Fiat listed there, their tickers. This is because they're going to have to readjust their supply chains regardless, and so we're more negative on those names. Looking at bank deregulation, so Mick Mulvaney, who's the head of the CFPB, continues this deregulatory push. And really, one of the first big steps we saw was moving this regulatory threshold from, I'm sorry, that's a typo there, 50 billion to 250 billion. Those M's are supposed to be B's, which again may lower the regulatory costs and spur regional bank M&A activity, in our opinion. So we are actually positioned in some regional banks that we like, and then even the custody banks like Northern Trust and Bank of New York are interesting plays here for the further deregulation, and that's on the long side. Flipping to a couple of more here, the ethanol mandate, this is one where I mentioned earlier that corn states are pushing for year-round ethanol production. And another thing that we think could help the ethanol producers is Japan opening up the US to ethanol exports, and really as the country moves away from Brazil sugarcane ethanol. So they had been buying their ethanol from Brazil. They're more open to buying it from the US. So we're watching Arthur Daniels Midland, Green Plains, and Valero as potential ways to capture that. Flipping to drug and opioid distributors, there is very clearly to us a bipartisan effort to combat the opioid crisis, and we're seeing class action lawsuit that was launched in Cleveland really against the drug distributors. Then Congress or the House called drug distributor executives in front of them in early May. And we're pretty cautious on these stocks right now, but we think longer term, they've really become the scapegoat and could become a value play down the road. Cardinal Health is one that I would call out there, but we list a few of the others. And then the last policy example that we're looking at for 2018 really closely is these refiner RINs. So these are renewable identification numbers. You can kind of think of them as a renewable type tax credit. But what historically had happened is the refiners had to buy these RINs, these tax credits, in order to cover their blending obligations. Kind of think of it as an offset to their pollution. Well, what happened recently was EPA's Scott Pruitt started granting renewable fuel credit waivers to the refiners in late March. And I think you'll take a look at some of these refiner stocks since late March, and you'll see some pretty strong performance, really strong price performance there. based on not only oil rising, but we think the policy in these RIN exemptions is really a big driver there. So that's it for my prepared remarks. I want to make sure that people are aware of our contact information. We are based in New York City. If you have any questions following this, you can email info@eventshares.com. And like I mentioned, eventshares.com is the place to sign up for research where you can get free policy investing research. We have a weekly policy insights that's very popular. We call out specific policy examples we're watching and which stocks and sectors are most impacted. And then eventsharesfunds.com to learn more about which strategies we are managing. So I'll leave it there. And I think we're going to turn it over to questions, but I want to make sure people can see our website real quick. So I'll bring a quick preview there. So here's eventshares.com. You can watch a quick video on really how policy investing works. Download the white paper. This is a very popular starting point just to learn more, and then check us out in the news. There's definitely lots of links to subscribe, and then the research blog is a great place to see really where everything is aggregated as far as all the research we produced. So for now, we're going to pause just for 30 seconds. There is a question and answers bar. If you're on the webcast, you can type in some questions you have, and I'm going to let those accrue for just 15 seconds here, and then we'll kick off some Q&A. Okay. So I have some good questions coming in. I'm going to take the first few, and we'll see how far we get. I want to make sure to be efficient with everyone's time here. But the first question is, how do you analyze policy with all of the noise coming out of Washington? And this is one we get a fair amount. So great question there. But I think EventShares looks through a lot of the noise and tweets coming out of DC and really seeks the major legislation and regulation that can change business models. So like I mentioned, policy a leading indicator in our view. And so we looked at things that can change a company's long-term earnings potential. And if you think, while the media portrays Washington as this chaotic carnival, if you will, there's a very rigid policymaking process week in, week out. And we have a recent research post that I would encourage you to check out talking about how there's a very rigorous weekly, every week Congress is pushing policy. So the bottom line is a lot of the headlines don't matter. They're just noise. Next question. What is your investment process? So we covered this a little bit, but maybe I will just touch on 70% of our investment process is really focused on the top-down policy macro, if you will, where we filter out the noise, as I just mentioned. And then 30% is drilling down into the individual security selection, which is more straightforward, at least from a traditional investor's perspective. So I think an example maybe like defense would help. So take defense spending. Trump and many members of Congress campaigned on really building up America's military. We saw that agenda begin to materialize about 12 months ago and then really ramp in this last fiscal budget. And this is just to give some context. This last fiscal budget was the highest defense budget request post World War II after adjusting for inflation. So a big dollar spend on defense. And I think the writing's on the wall that we think this is really just the beginning of a multi-year defense spending increase. And hence you'll find, and you'll see it throughout our research, that we're constructive on US defense stocks long-term. Next question. What sources do you use for researching policy catalysts? That's a great question. We really leverage a lot of different sources, but to give some examples, we have various contacts in DC, whether it's staffers or journalists or different types of think tanks who are plugged in. We read policy think tanks and policy blogs pretty regularly. There's some specialty research providers we utilize, and then we do follow major news publications. And like I mentioned early on, there's some journalists that we think were really plugged in well, and those are some of our favorites to use on the journalist channel. We also track Congress.gov, like I mentioned in the slides. We do watch C-SPAN, and numerous government agencies' publications too are good sources for us. Then further, we look at government agencies writing rules and regulations really as the long tail investment catalyst after a law is passed, and this is typically a multi-year process. So to summarize, I think EventShares focuses on which pieces can really disrupt a company's business model and earnings power, and this can be both on the positive and negative disruption, and we seek to position to profit from both directions of that. Next question. What resources do you offer looking to learn more about policy catalyst investing? So I flipped to the website, but I would say that eventshares.com is probably the best place to access policy investing research. We publish everything there, and you can also go through the Interactive Brokers research portal, Google EventShares, one word, and Interactive Brokers, and you'll see it. I think it's the first link there, give you some steps on how to sign up through your Interactive Brokers platform. But back to the research that we do provide. So the white papers are published typically quarterly. We have the weekly policy insights. We have the policy spotlight, which is really a deep dive into a specific policy and typically a specific stock or two. And those are coming out once or twice a month. There's lots more on there. There's weekly blog posts as well. And I would encourage you again to check out eventshares.com. Next question. What policies are you watching right now? Well, I might give you a sneak peek of something that's coming up. I like this question, great timing. Give me one sec, I'll pull it up. I think I have it. So this is a little bit of a sneak peek of a policy tracker that is going to be launched tomorrow on our website. So you can find it on eventshares.com. It will be on the home page, but really looking at which policies we're most focused on. And you can see it really touches almost every sector in the US economy. So financials, industrials, technology, ag, tax reform is huge. That's one that we're watching very closely and think it has multi-implications, kind of like the next Obamacare or Dodd-Frank over the next decade. Education and healthcare and energy and aerospace and defense, as I mentioned. So check this out at eventshares.com when you get a chance tomorrow. And there's a couple more pages attached to this that really drill down into the individual policies that we're watching. Okay, next question. What do you think about steel stocks considering the political landscape? So good question there. We were positioned in steel stocks looking at the tariffs. We held a position all the way through early March when we started to see the exemptions take place. So I think our view on steel is that a lot of the price performance has probably already been baked in, and if there continues to be exemptions, we're actually probably better sellers of steel stocks at this point. Let me looking through a handful of questions here. Okay, this is a long one, but I'm going to read it. The person says, thanks for the presentation. I give you credit for the novel approach. However, doesn't everyone end up at the same place? You start from policy to the impact on individual stocks. Others start from individual stocks, but will get the policy impact too. Either way, any material policy will be analyzed. And I think thanks for the question. That is a good question. Our view and we've looked at this and researched it deeply over multi-decade period, really back 40, 50 years, that policy is really that leading indicator. So the company's stock prices and earnings generally trail and lag that policy impact. So if you spot the policy, then you say, okay, this is going to impact these companies' earnings. What we've noticed and analyzed is that policy happens well before you see it materialize in the company's earnings. So that's really the whole thesis for our approach, is that you're seeing policy as that leading indicator and can position ahead of really all the other investors out there. I think we're going to take one more question. And the question is, what was the reason for you to do policy research instead of working, for example, at Goldman? Good question. I think my co-founders and I all left good paying jobs to start EventShares, and really the thought being policy impacts everybody's portfolio. Yet there was no one providing this research for people to utilize and actually capitalize on policy changes. We thought there was a huge white space that, for just knowledge perspective, where people needed to be educated on how impactful policy is, as well as the investment opportunity. We wanted to offer an investment fund that gave people the opportunity to capture policy catalysts and have really a one-stop shop for the research and the investment management. So that's why we built EventShares. It's not just policy research, it's also the investment management side of things, where we are trying to help investors, we're educating investors, while at the same time, we're putting our research to work in our portfolios. So I think that's a great place to stop, and I really appreciate everyone tuning in today. Again, if you have any questions, feel free to email us at info@eventshares.com, and thanks for listening.
Well, Ben, thank you very much. And for those who are in attendance here today, I did want to let you know, well, first of all, what I'm going to do is grab back the controls and show you that EventShares is available on the Interactive Brokers platform. Let me see here. I'll grab the controls back for just a moment. Let me see. Let's go ahead and... okay. Now I do have it available. I did want to point out, you'll see that I've just opened up the Trader Workstation. It's now available on the platform, and did want to show you how you'll be able to access the EventShares information. Notice here, if you go to the New Window button, you'll see, let me see, here we do have analyst research right at the very bottom. And then notice from here that EventShares is available, and you'll simply need to access the information directly from here. Now, also do want to point out, let me get over to our website. And you'll find underneath the pricing menu that EventShares is offered for free on all of the Interactive Broker Trader workstations. So what you can do is simply go out and access it. Notice here it's available on your platform. So simply go out and access the information directly. And with that, we are going to conclude today's event. I do want to thank Ben Phillips for today's presentation and remind you that we have been recording today's event, and each of you will get direct access to the recorded playback soon after this session ends. So if you want to come back and review the concepts or any of Ben's slides, simply watch your email later on today. By the way, you'll also find today's event will be listed under the education menu on the webinars section, where you can find recorded versions of today's event. So you can find today's recording will be listed there as well. With that, we are going to conclude our session today, and thanks everyone for your time that you've spent with us here this afternoon. You can exit using the X in the upper right-hand corner of your screen. And once again, thank you all for your participation, and have a great rest of your day.